Hello, this is Dave, and welcome to Equity Story. Just before I start, this is just obviously general share advice and not personal advice. And firstly, it's great to have Joe Hanna, the CEO of PropTech Group, with us today. And I'm actually really glad we're doing this interview because my leading analyst, who we call the wolf, he's not really a wolf, Joe, he's more like a little baby lamb, but we call him the wolf anyway, just to make his ego feel a bit better. He really loved Mitula when you were in charge of that one, and you obviously did very, very well. But also, he's been going on about your company for about a year to our members, telling everyone how good it is. So um, I'm going to leave most of the questions to obviously Pete the Wolf, and because he knows your business obviously inside out. He's been researching you and still keeps talking about you. And we always try and not love companies, but I think he loves yours at the moment. So, c'est la vie.
Yeah.
Thank you, Peter. Thanks, David. I appreciate that vote of confidence.
Thanks, Joe. And I'm under pressure now to obviously ask the right questions, aren't I?
There we are.
But saying that, we just have a brief little talk before we went live. And I was saying that, I obviously was following your company, Mitula, but I also was following the other two men behind PropTech, and that's Georg Miel, I believe, and Simon Baker.
Yeah.
So, they're obviously very successful with their companies as well, with iProperty Group and real estate.com.au. I think iProperty was taken over, and I was a shareholder at the time. So it even makes me even feel much better at the time, right? But so the question for me, first of all, there's going to be a few questions, but the question from that point of view is, why again? Why again? Why would you go again? I mean, you've obviously tasted success already. What's the go again?
Yeah, look, really good question. I guess if you think back at our time at the portals, and actually if you take a step back and think about the investment in PropTech over the last 20 years, the vast majority of that investment from VCs and institutional investors in the capital markets has gone into portals, real estate portals, realestate.com, Domain, iProperty. And if you recall and followed us at Mitula, you'll know that we kept on talking about how we get closer to a transaction. The next wave is how you get close to the transaction for a real estate transaction. So it occurred to us that portals making the shift from being very consumer focused to then helping an agent was never going to happen. They just couldn't do it. So getting closer to transaction for us was essentially what PropTech Group is all about today. How do we inject ourselves into the workflows that agents use, the software that they use all day, every day? And in doing so, we can then influence the decisions, influence the workflows, and get us close to the transaction, actually facilitate the transaction with the agent's support as the leading software provider for agents. So the short answer is, why do it again? I mean, the job wasn't done. We see significant opportunity to continue to innovate without disrupting the way we all buy, sell, and rent houses. And the way to do that is by embracing agents, not trying to displace them or replace them.
Right. So would it be fair to say that the real estate space is still behind maybe technology that is there a need for disruptive type stuff to come in and keep innovating in that space?
Yeah, look, I think it's very fair to say. I mean, if you look at the last kind of 5 years and the adoption of technology in PropTech, I mean, PropTech lags in terms of the real estate industry rather lags in terms of its adoption of technology. Remember the old days you used to have to go to a bank teller to get a financial transaction done. You can do everything on your phone now with mobile banking, and that's banking. That's a very difficult industry to digitize. But still, with PropTech, it's still very largely fragmented and very manual in the way that we all operate and buy, sell, and lease houses. So I think there's significant upside to innovate and continue to innovate and digitize the property transaction through technology. But just make it easier. Let me give you some examples, if I can, which will probably make sense. So if you think of two possible streams of scenarios. I'm a person looking for a property to rent or to buy. I go to realestate.com or Domain. I find two properties. I click on one. It says contact agent. I click on another contacts agent. An agent that's digitized will have a CRM, hopefully a PropTech Group product, that will then automatically kick off some automations. Let's automatically send an email to the consumer saying, thank you for your inquiry. Here's a link to our website where you can download more photos, maybe look at a virtual tour and get a sense of the space of the property you want to purchase, and then book yourself in for an open for inspection. Click this button to self-serve, and you can do 3 or 4 other things in your own time, whenever you want, without the agent having to call. Let's look at another stream, which is non-digitized, where click the contact agent, that sends an email to an agent. Let's say it's 2:30 in the morning on a Sunday morning. Agent gets into the office on a Monday, they check their emails. By Monday afternoon, they're calling the person back, trying to book an inspection. Person's busy at work, they don't respond. Tuesday comes around, Wednesday, a lot of wasted time of back and forth just to get the person to book a time to view the property. In this first scenario, the person's self-served. Now, what we've done here, we haven't disrupted the agent's workflow at all. We've actually made their process a lot more streamlined and reduced the mundane, low-value tasks to enable them to spend more time on the high-value, nurturing the consumer relationship, getting a human relationship there. So that's just a really simple example of how PropTech Group and companies like PropTech Group can continue to innovate in the property space just to digitise the whole transaction stream.
Very, very good. And actually, it probably a claim, because Dave was asking me before we went on air, Property Group, I mean, what's so special about it? So I think you've pretty much answered it pretty well, because it seems like it's obviously very, very helpful to the real estate agents. So from that point of view, it is disruptive in a way, isn't it?
Well, look, it's disruptive insofar as removing the need for them to remember to do stuff, right? And if you think about, in a buoyant market, real estate agents have this glut of buyer inquiry that comes through. On average, let's say there's 100 inquiries that come through on a property, record numbers that are open for inspections. In the old days, an agent would have to call and qualify each lead, call them to book an inspection, then call them after the open for inspection to get some feedback and see how they go. In today's world, they don't have time to do it all because there's just too many buyer inquiries. So if you think about the adoption of technology, one of our products is around how we lead nurture, and lead qualify, and lead score. So that essentially what we want to say to agents is the low value stuff, getting people to look at a property, getting to book their own for inspection, to check in, and even asking them how they went after that property can all happen digitally, either via text messages, through natural language processing and some AI, so that you know that if you need to make 3 phone calls, we can give you the top 3 that you need to make for people that are genuinely interested in either buying or selling their property.
Joe, it's funny that REA haven't really developed this space, and you've come in and done that sort of, I suppose, under their radar. Are they interested? Do they talk to you about trying to develop and work the software together?
Yeah, look, we certainly work both with all the portals, REA and Domain in particular, and probably more so with Domain, to be honest. And the fundamental reason why they can't do this themselves. Let's start there. So first of all, as you know, we've got a board of 150 years of experience in property portals. And as I mentioned earlier, back in the property portal days, what we wanted to do was get closer to the transaction. But the problem with the portal is it's like the newspaper of today. They're very much consumer focused. They're all around, as a consumer, how do I find a property that I want? For them to inject themselves into the workflows of an agent becomes increasingly difficult for 3 main reasons. One is I don't just get my leads from realestate.com. I get them from all sorts of sources. 2 is agents are apprehensive about sharing all this data that they own with a portal. I need to have it sold back to them for multiples of dollars beyond what they paid for it. So really, it's important to have independence. It's important for agents to know that their data is theirs. That a group like PropTech Group isn't about to exploit their data and use it in a way that doesn't actually support the industry. So really, it's opportunistic for us because portals just can't get into this space in a way that's trusted. And agents just won't trust them enough to share that level of data and workflow with them. Obviously, as a portal, it's something that's attractive to us, or to them rather. I know back when we were running portals, and Simon bought back in 2005 a CRM called Hub Online. Back at Fairfax, we bought a software solution called My Desktop, which we've acquired and shut down as part of PropTech Group. And the reason we bought those is, as a media business, as a property portal, understanding the unit economics of running a real estate agent was extremely important. You could see where they're spending their money and maybe influence their marketing spend. But as a real estate agent, the last thing I want to do is have realestate.com know how effective their leads are and know what it costs me to process their
Sure.
leads. So it's a bit of a a double-edged sword for them. Agents won't adopt it, and the portals aren't really tuned or set up in terms of their technology to provide this service. Kind of the last thing I'll say on that is they're very different businesses. Right? Running a high-traffic, consumer-facing portal is very different than running mission-critical software that agents rely upon all day, every day. They're very feature-rich. They're very focused on the agent. They're very much around workflow automation, trust accounting, financial management, sales management, and portals just aren't set up that way. They're really set up to be high-traffic, consumer-facing.
Well, I know, Joe, that's the amazing advantage of your model, because here at Equity Story, we've got our own sort of, we call it Confusionsoft. It actually has another name. But once you're with one of these systems, it's very difficult to leave, right? Because you're so integrated. So to have a business model like you've got is excellent, and obviously everyone's happy with it and enjoying it as well. So it just makes for a great business, a solid business platform.
Yeah, well, look, the thing to note is we have 8.5 years is our average tenure. So that's 8.5 years of opportunities with a given real estate agency for us to continue upsell, cross-sell, and add additional products and services. And there's a couple of reasons for that. As you rightly mentioned, David, it's once it's in, it's in. I mean, these are the systems that they use all day, every day. So the training burden of trying to move them to another one is difficult. There's also reliance on new technology, new features, and building a bit of an ecosystem. So PropTech Group kind of starts with that core CRM and the core workflow management system, and then continues to add on products and services so that there's just no need for an agent to go anywhere else. In fact, what we're trying to do is get them to stop subscribing to all these other PropTechs that do a little bit of extra stuff and get it all embedded into a single platform. It makes their lives easier. They don't have to log on to another system, cut and paste data, or just having a central opportunity or central platform to run their back office. It just makes economic sense.
Fantastic.
Very, very good, which actually you sparked my next question out of that. And that is the actual other companies in this space, right? Because I know there must be some differences between the things. And I just wanted to know, what sort of threat they pose, what the goal is at the moment. And I think when I was doing my little research before, obviously, sending some questions to you, I came up with Agent Box and Rex, right? Which I'd say the top three in Australia, right? With you guys. So can you just quickly, briefly go over what makes you different between the two, and where do you see yourself, in comparison, market share wise?
So a really good question. Let's start with the last question. When we listed the business in November 20, we listed with about 29% market share by number of real estate agency offices using our products. We're now at 41% market share by number of real estate agency offices using our products in Australia and New Zealand. We're actually at 51% market share by number of real estate listings that are sold in Australia and New Zealand. So we have the largest number of agents, but are actually selling the most properties. When you compare that to Agent Box and Rex, Agent Box sits with about 18% market share by number of real estate agency offers, and Rex with about 12%. Agent Box is owned by a company called Reapit out of the UK, which are backed by AKKR. So a PE company that made that investment well over 10 years ago now. And Rex is privately owned and privately funded. I guess the key differentiator for us is they both sell CRM businesses, and that's that core of what agencies use all day, every day. We're more than just a CRM. What we're trying to do is build an ecosystem of tools that an agent can use that all work together, play nice with each other, that interoperate and interact in ways so that agents aren't having to cut and paste data or share data in a way that's not very effective or efficient. So with us, we're much more than a CRM, but note that the CRM is what agents use all day, every day. We then build features above and beyond that and additional products above and beyond that. And the reason we can do that is that we have an open API. So I'll try not to get too technical here, but essentially what that means is that of the 320 PropTechs that service the real estate industry in Australia, which if you think about it, just in Australia, there are 990 real estate agencies, 9,900, real estate agencies, to have 320 unique PropTech solutions. all of which will do one small piece that the other does, or there's a bit of crossover, is unless all these things work together, the agents are actually becoming less effective and less efficient than they otherwise should be. So with our system, and a key differentiator is we have an open API. So we can integrate with any third-party product that's deeply integrated into our product suite, so that agents don't have to log out and log back in. That isn't necessarily true for our competitors. The other thing is, and they're very good competitors, by the way, so that they do, like any competitor, provide a threat, but we're winning business away from them and growing at a rate that far exceeds their growth. But like any business, there's the competitive tension is actually good. What we do is we provide continual releases, new product features on a weekly basis, and individual products almost on a monthly basis now. So if you think about the stat, just to articulate that point a little bit further, when we listed the business in November 20, we had 1.06 products per customer. As of our half-year results, we now have 1.85 products per customer. So CRM and at least one other, or almost at least one other. And I think that's a key differentiator for us as well. The other thing to point out is a decent chunk of our OPEX or our expenses have been CapEx and OPEX on product innovation. So we have innovation in our DNA. I mean, we want to continue to release new products that then streamlines what our agents do. And a lot of this is driven by our customers. You know, we want to be able to do this. We've never seen something that can do it this way. And we'll continue to build and release things to the market at a rate that the other guys just aren't keeping up with.
Rightio. So just to confirm, I mean, if obviously I was running a real estate agency, you came up to me and said, I've got this, you know, super duper CRM that you can use. The way you sell it to me would be our one integrates, our APIs are excellent. You can integrate to anything. Plus, we've probably got more features than everyone else. Correct? Would that be, in a nutshell, the way to sell it?
Correct. I mean, we'd even take it a little bit further and say, well, what else are you using? What are your other existing PropTech subscriptions now? And by the way, you won't need that because we do that in our system, and you can save money on that. And you can upgrade our feature to the premium feature, which is half the price of what you're paying there. So it's not only is it more feature rich, but it actually removes the need for an agent to subscribe to 20, sometimes 30 different PropTechs. One thing I'll say on that is agencies spend $730 million a year on PropTech subscriptions. So when you think about where we are today and look at the potential growth moving forward, we're still capturing only a small portion of that, but we have the biggest market share. And the reason for that is the CRM is at the base, and there's all these other layers of things that they subscribe to. Our job is, in a nutshell, is to say, well, we can give you this one, this one, this one, and this one, so that you can stop spending the $60,000 a year on your PropTechs and spend $40,000, but spend it all with us.
Rightio. All right. Well, very, very good. Which brings me to the next point following that, and that is, you know, you're obviously doing quite well here in Australia. I saw that you are pushing into the UK, and we've spoken about one of your competitors that actually is owned by a UK entity. So the question is, you know, the market's obviously bigger in the UK than in Australia. How difficult are you going to be finding that push into the UK? Because I've seen a lot of companies trying to expand overseas and come back home with tail between their legs, right? So to me, you're going to look like a hero, or you're going to probably look like a fool, right? So can you just quickly just talk over the strategy to going into the UK?
Yeah, look, it's a really good question. I think we've all seen Australian tech companies head over overseas, particularly the UK, thinking it's very, very similar to Australia, will be okay, and coming back with millions of dollars burnt and their tails between their legs. Well, look, I think for us, there's a couple of key points that are worth calling out. One is the UK is twice as big and twice as backwards when it comes to real estate's adoption of technology. So in many respects, we're dumbing down our technology to take it to the UK because Australia is actually more advanced when it comes to PropTech. Two is the market structure and dynamics are very similar to Australia when you look at the property industry, given that we're all governed by essentially common law. And then three is our approach over there we've been there for over 18 months. We've got over 1% market share, and we're winning some of the big customers over there, the big mid-tier franchise groups, and it's very much in stealth. So we have a significant focus on our cost management. You won't see us go off and raise, tens of millions of dollars just to have a crack at the UK. We very much test and learn, and then reinvest based on those learning processes. So the reason I feel with confidence over our UK strategy, and I'll qualify that in a moment, is what we're doing is working. We know that we can take a localized version of particularly of our Vault product, which is our primary enterprise grade CRM business and property management business. We're winning business through a small team on the ground over there organically, and we're growing kind of slowly organically. Now, I guess the opportunity for the UK is how do we accelerate that growth? Rather than go off and spend a bunch of money on marketing and sales, what we're likely to do is replicate the playbook that served us well. So I mentioned there were 320 PropTechs operating for agents in Australia. In the UK, there's over 1,500. So what that means is there's significant opportunity for us to consolidate the CRM market in particular, to buy some of these older or aging technologies and replace them with our superior technology and walk our customers across or transition them across to get to a meaningful market share that enables us to then replicate that acquisitive growth strategy that served us well here in Australia.
So it's extremely fragmented over there in the UK by the sound of things.
Even more than Australia, even significantly more than Australia.
So is there a dominant player in the UK? Is it going to be a difficult task to grab a significant market share, or is it something that you can comfortably get to a certain stage just doing the small stuff first?
Yeah, so look, there are two dominant players in the UK. One is actually a series of 5 unique businesses owned by Mitula Group in the UK. So they own 40% market share across 5. Now, what they're doing is consolidating that into one. So there's an opportunity for us to grab some market share from those other smaller CRMs that they operate. Then there's Reapit, the owners of Agent Box here, and they've got about 20% market share over there. That's 60% of the market gone. But what's interesting is that 40% of the remainder is the 1,500 other CRM providers. And so they're all very fragmented, all very old. And in the UK, what's even more fascinating is if you actually watch an agent operating over there, they've literally got 10 tabs open on their browsers just doing their day-to-day operations. So that whole cut and paste, log in, log out is actually a major issue in the UK. By having this kind of unified, simple solution to do everything, we're getting really good cut through just in our organic sales there. So ramping that up with a bit of marketing and supplementing that with some M&A, I think we'll see some significant growth opportunity. The last thing I'll say about the UK has probably been the thing that's affected us most with COVID, to be honest with you. And by that I mean, our inability to jump on a plane and head over there up until now is what's made it difficult for us to fast track the growth of the UK. Thankfully, that's kind of now removed or hopefully behind us. Let's wait and see. But yeah, we can certainly do more in the UK. So our management team's heading over there and looking to prop up the team there.
Joe, how do you get into the doors of the real estate agents? Are you literally got sales guys knocking on the door, walking in, and to get the right guys, it just takes time, does it, to build the salespeople you need? Yeah,
it does. Look, unlike Australia, we don't have the reputation of having the largest CRM or the contacts of years of experience. So the way that we've launched in the UK market is by having a crack team on the ground. A few salespeople, a few developers, as in tech developers and engineers, some support staff that are essentially going out, banging on doors and opening up. They're being supplemented and supported by an Australian team and led by a UK GM. But it's in a way that's very cost contained. So like I said, we don't necessarily want to just throw a bunch of money at it before we know that it's all working. So the last 18 months has been softly. If we can pitch for this business and it's a competitive pitch and we win, then that's proving that our technology has real relevance. Let's keep going these pitches. We don't do a lot of door knocking. A lot of our work is referrals. So once one customer comes on board, an agency, they'll tell their other friends. And in the UK, just like Australia, any mid-size and large will go through like an RFI, a tendering process for their replacement system. Given that the tenure there is just as long as it is here, they don't want to commit to something that they don't want to change in the next 6 to 7 years.
Fantastic.
So the most important thing for me, I think, which probably going to hit Dave pretty hard. You said that the UK is like a dinosaur, really. So Dave will definitely feel at home with that.
Well, listen, Wolf, I can vouch for that because before I went to Australia, I literally thought everyone was fighting crocodiles here, and it was all like Crocodile Dundee. And when I arrived, it was more civilized than the UK. So, So,
At least I'm glad someone's confirming that it is really really backward over there in England, because I could not believe it when Dave was telling me.
well, I noticed you're near Birmingham or Wolverhampton, where I was born. So if you need me to translate, I can speak the lingo for you.
We may have to take you up on
Well,
that.
if you ever need that, no problem.
All right, let's move on to the next part. Let's actually talk about some of the nitty-gritty stuff, right? Which is, I suppose, the financials, the modeling of your company. And we've seen a big change recently with the tech space undergoing a significant re-rating. It's still obviously ongoing. We just don't know what's going to stop. People are looking at your cash flows. They're looking at your bottom line. It's much greater emphasis than it ever I think I've seen for some years. So I'm glad I'm seeing some sort of semblance of balance coming through your company, and it's one of the most attractive things for me when I look at some of these tech stocks, because that's my bread and butter. So can we just quickly discuss your strategy? How important is it to you guys to have that balance? Because I know you've already touched saying that in the UK, you're not gonna throw just millions of dollars just for the sake of it. You are obviously taking a very careful approach to it. So just give us an idea exactly how you're going to go through that with that.
Yeah, look, I think we've all seen high growth SaaS businesses that focus purely on the top line and pay no regard to the bottom line. That's not us. I mean, we have a clear guideline, a clear directive to grow as profitably as we can, as fast as we can. But we certainly don't want to see ourselves in the red. So cash management, again, is in our DNA. And if my CFO was listening in, he'd be nodding, kindly and smiling. Look, certainly for us, we see an opportunity, given the last 12 months, to grow at 98% without necessarily boiling the ocean on the cost side. I guess, in a perfect world, if we wanted to get deeply in the red, we could grow faster. But that's not something that we want to do. We don't want to take the risk of having to, take bets on things that require significant costs. I think the other side of it is the benefit of having a kind of growth through acquisitive as well as organic strategy, is that you don't necessarily have to go through the R&D process and take bets on things that you don't know will work. We can merge in companies that are having early signs of success, particularly in Australia. So if you think about our business, we have by far the largest single distribution of any other company with the real estate agencies through the platforms that they rely on every day. So for a PropTech that has a really good idea, maybe some really good tech, but it isn't getting the cut through, we can actually pull them into our business. We'll touch on M&A a bit later, I guess, but let's just answer this question over cash management. For us, that is absolutely critical. From the board down to management, we all have a very clear directive: grow as profitably as you can, invest cash back into the growth, but don't go into the red. Let's be careful over that bottom line. What's interesting is if you actually looked at our half-year results and looked at the evolution of costs over the last 12 months, you can see that we've spent a significant amount more on immediate revenue generating initiatives. So sales, marketing, customer service, or customer success, an extra $2.5 million thereabouts this year above last year. Product and technology is up $1.7 million this year against last, pretty much half and half capitalised on new innovations. So if we weren't looking for the growth, you could immediately take significant portion of those costs away, and you'd instantly be running at 30 to 40% margin. We want to make sure that kind of mantra follows us throughout the journey.
Well, that is very reassuring, obviously, from an investor point of view, and it's something that, like I said, it is crucial at the moment. So I'm glad that you're actually putting a big emphasis on it. So thank you for that. All right, let's actually go on to the M&A space, because that's a strategy that obviously is part of your way of growth in a way, obviously organic as well, but strategic acquisitions definitely can help significantly. So can you again just quickly go through the strategy moving forward, because we've seen already a few little acquisitions here and there, but what's in store?
Yeah, so look, good question. I guess growth through acquisition is a part of our business, and that's fundamentally predicated on what I said at the very beginning. At the core, we provide the baseline technology that agents use all day, every day. I mean, one way to think about it in simplistic terms, it's almost like our core systems is like the Windows operating system. And then the add-ons that live above Windows, Microsoft Word or email, separate products that we add on. Now, we've got two choices. We can either build those add-ons and take years to build them and expense, or we can buy them or merge them in. What we've proven is that companies under PropTech Group's umbrella will grow faster. Website Blue grew by 100% in ARR, accelerated the growth by 100% in ARR since we acquired the business a year ago. If you take the month-on-month versus the previous year, it actually grew by 200%. Eagle, which was a recent acquisition in July, has grown by 31% since our acquisition. So we know we can grow companies faster. Our M&A strategy is pretty simple. Well, and I will point out before I get to that, is we see a lot of deal flow because our system is the source of truth. Remember the Microsoft Windows, is that for companies to work with an agency, at some point in time, they'll need to integrate with our system. We get the opportunity to do that integration, provide them with an API access, and then see how good they are. So the deal flow is great for us. We get to try before we buy. But the strategy is a simple one, is we look at opportunities for where we can improve our customer base or improve our product base, rather with new products that we aren't doing. We always assess a build versus buy versus partner model, where partner being the least preferred. We either want to build or buy. And third, we look at ways to drive up our ARPA, average revenue per agency, which is a key driver of growth for us. If we can solve those three things through an acquisition, noting that we can almost overnight take a small startup to the biggest provider in Australia, then we will. The other way we're looking at M&A is a little bit more creative. So, I don't want to have, go out to the market multiple times to raise money to take bets on startups. What I can do is actually earn in equity through our distribution, through our deep integration with our tools, and actually prove that it works, getting, in some instances, 10, 20, 30% of the business before we decide to take over the rest. So you'll notice in our results release, we spoke about PropTech Ventures. Now, this is essentially a zero cash equity earning option. And it's a nice way, I think, a neat way for us to not have to raise a lot of money to take bets on things that we think will be successful, but we really want to try them before we go out and spend the money to acquire them.
Rightio. So would you, again, is it a balanced approach, or do you, which model do you prefer? Down the acquisitive way, or is it down the developing your own stuff?
Oh, look, I think it's a balanced approach. I mean, we are a tech company, so as tech companies always want to build their own things. Look, in reality, is if we get a significant shot in the arm from a product technology point of view from an acquisition, we'll do it.
Yeah.
If we're getting a little bit of a head start, but it's only going to cost us another 3 months to do it ourselves, then we'll build it. In reality, it comes down to price and opportunity. What we're finding is in the private world, PropTechs are getting crazy valuations and crazy multiples. That won't happen with us. You'll see from our last few acquisitions, and indeed moving forward, that each acquisition will make, just like our cash management, we want to be accretive, value accretive for our consumers. So we'll for our shareholders rather. So we want to make sure that we're buying businesses at a lower multiple than what we're trading at, and that we're both enjoying the uplift. So it is very much a balanced approach. It's fair to say we've seen a lot of PropTechs since we listed the business only a year ago now. We've said no to many more than we've said yes to, largely because they're just features of what we've already built, or they're not far off the stuff that we've got in our pipeline anyway.
Joe, can I ask you a question? Often people are talking that we might have, it could be a property crash, or property could have a hard time. Really, your business model, it has limited effect if that happens, correct?
It does. So unlike the portals or the other PropTechs that you would know, is our revenue is not linked to listing volumes. So real estate agents pay us a SaaS fee, a monthly recurring fee for paying for our software. And in a buoyant market, a real estate agent will actually buy more software from us so that they can help filter some of the leads that I came through that example I gave you earlier. When the market's hot, the number of leads is so great that the agent needs to use our lead filtering, lead nurturing, lead scoring technology, so they're not wasting their time or hiring people to call back leads. In a suppressed market, an agent would subscribe to our prospecting tool to uncover vendors that were otherwise hard to uncover or otherwise hidden away. So in many instances, we're shielded by fluctuations, peaks and troughs in the property industry. And to be honest, extremes actually help us in a lot of areas, because agents will adopt more technology in both up and down markets.
Brilliant.
Thanks, Dave, for stealing my questions.
Sorry.
That's all right. I'm actually going to follow that up with the next question, and that would be current property market. Right? We know, I suppose, a lot of commentary going on. Saying that we obviously had buoyant conditions for a long time. Are we going to see a bit of a cool off? So, can I ask you your just personal feel and opinion? Where do you think that's going? And then following that up is, what do you see as your biggest challenge over the next 12 to 24 months?
Yeah, so let me address the property industry by and large. And noting what I said earlier about the fact that we're somewhat shielded, our business is somewhat shielded from the fluctuations. But certainly we're seeing no shortage of demand. I mean, buyers are at an all-time high. Email inquiries are at an all-time high. Attendances to for inspections are at an all-time high. And then if you think about interest rate rises, I mean, let's not forget the days of our parents of the 80s where they were paying 20% interest rates. Interest rates are crazy. So even a single percentage point, 2 percentage point increase on interest rates is still value for money when you look at what we used to pay. So I guess there's a lot of conjecture around what's happening with listing volumes. Will listing volumes depress, and does that mean that there'll be a glut in the market? My view is, I think we'll see house prices continuing to rise this year. We might see them stabilise next year. But again, in many of those instances, it's not because the buyers aren't there, and it could be that the sellers are a bit scared about selling because they'll just have to re-enter the market anyway. I don't think there's a crash coming personally, and this is my personal view based on the data that we're seeing. But there probably is some softening of the market in general. Now, to get your question around the challenges for us, look, it's a good question. There's no shortage of opportunity for us in terms of what's ahead with PropTech. I mentioned that $730 million that agents are spending on their SaaS subscriptions a year in Australia. We want to get as much of that as humanly possible. The way we do that is continuing to acquire businesses and continuing to launch new products. Moving from 1 to 1.85 to 2 to 3 products per customer, moving our ARPA up, and reducing their total spend on technology, reducing their need to use other vendors. What we find above and beyond that is that the real estate industry also accounts for $10 billion in ancillary products and services referrals per annum. Now that's insurances, mortgages, conveyancing, utilities connections. And if you think about what the portals are doing, you've got REA at this end that have just bought Mortgage Choice, and you've got PEXA at the other end that have done a deal with an insurance company. When you think about where they sit in the whole property transaction process, it's either too far upstream or too far downstream. The reality is we're in the centre. We're there when you're signing a contract with an agent to buy a property. That's when you need a home loan. That's when you need insurance. That's when you need a conveyancer. So increasingly, we want to inject ourselves into that significant opportunity and share some of that revenue with our agents. So to answer your question more directly, I think the risks and the challenges for us is just being very clear on our strategy, very clear on what we're doing, noting that we want to remain, in the black as much as possible, particularly from a cash point of view, and picking our products and picking our go-to-markets carefully. We could run the risk of trying to do too much too quickly. So I think for us, given the opportunity that's there, really laser focus on our strategy, really clear and in executing on that is probably the thing that we really need to focus on.
Fantastic. All right, Joe. I think we're pretty much close to the end of our interview, so thank you so much. But I'm gonna change it slightly around, so I might throw you off slightly, but that's okay. we normally trying to just find out a little bit more about the CEO, and see what makes him tick. So in my head I've devised a completely new thing we're gonna do.
Right.
I'm gonna ask you three simple questions. Hopefully you can answer it very, very, very simply, because I'm gonna ask you about yourself. So. Number 1, favorite holiday destination?
Oh, San Sebastian.
Okay. Favorite food or culinary experience?
Oh, I don't think I have one. I'm not fussy when it comes to food. I love food. I'll eat anything. I'll try anything once.
I think you said before your wife's cooking, was it?
Yes, my wife's cooking.
Sorry. Yeah,
Thank
yeah.
you, Dave.
It's
Yeah, my
okay.
wife's cooking, definitely.
Definitely.
That's very and how very good of you, Dave. Are you under pressure or something that you need to say that sort of stuff?
No, I just remember Joe saying that, and I just
Yeah.
when you're in the pressure of when with really
Right.
ridiculous questions like this, you forget what you're meant to say.
Yeah.
All right. And lastly, but not leastly, for those readers out there, your favorite book or the last book you read?
Oh, mate, I'm too busy to read books. I spend a lot of time listening to podcasts, immersing myself in the PropTech world, to be honest with you. So
I'm glad you answered that because I'm exactly like you. I don't read very much except like it's news articles or company announcements. That's me. That's my reading for the week.
Yeah, same.
All right. What about your what about your favorite movie then?
I won't give you. I don't really have a favorite movie. Again, I don't watch a lot of TV, but I'll give you my favorite band that I'm listening to at the moment. I'm listening to Stone Roses, which is an
Okay.
old.
Okay, that's much better than Wolf, who listens to Adele all day long.
No.
So 10 out of 10 for music
Nothing
choice.
wrong with Adele, thank you.
No. Listen, on that note, I'd like to thank Mr. Wolf for all the questions, and obviously Joe. Absolutely so exciting, your business, your company. You've done it. You've done it before. You looks like you're doing it again, and just the sort of it's exciting because it reminds me a little bit of what we've got here at Equity Story. There's so many verticals to grow the business, and I understand what what you're saying is that there's so much out there. It's disciplining yourself, isn't it? To say, hey guys, guess what? We're just going to do this now, and we're going to do this next year, and not try and do too much too quickly.
Agreed.
Brilliant. But thank you very much, and thanks for coming on the Equity Story podcast. Thank you very much, Joe.
Thanks, guys. Really appreciate that. And, thanks for having me.
Bye-bye. Bye. Bye.